Hi, I'm Tony, and welcome to Think Wealth TV. In this community, our goal is to get wealthy together. This week, though, didn't do so good. We're down quite a bit. Good news is, for the most part, everybody lost money. The market was down as a whole, so it makes me feel a little better about losing capital appreciation. I am primarily a dividend investor. I am forward-looking, but I'm not going to be one of those guys that lie and say, oh, it doesn't mean anything at all, capital appreciation. Yeah, it still sucks. Yeah, it's still something I look at, but it's not my main goal. It's not my end goal. Now, if this is your first time watching this channel, we're known for going deep into detail. I hope you guys are going to enjoy the video. I try to offer you guys so much information for free. I don't charge anything. Click the subscribe button. It doesn't cost anything. I have educational videos. If you looked at this video, the left side is green. That's for portfolio related content. Blue is for my educational videos. Make sure you guys check out those other videos that I have to offer, and click the like notification, and also share this video with everybody you know. I'm going to be going over my Fidelity accounts. I'm going to be going over a Robinhood account. Had a big loss there. Something I'm not proud of, something that sucked that happened, but I show you guys all my successes and all my failures. So hopefully very little failures to ever show you, but if it happens, you guys are going to see it. I was down about it. There is timestamps in the description. You guys feel free to use those. Jump around if you want. At the end, there'll be an Excel sheet. Excel sheet puts everything together in one place. That's what I use. That's what I like. It's very quick. It's very simple. Very organized.
All right, guys, we're inside the Grand Retirement account. This account right now is sitting at $26,531. It is down quite a bit. We were over 28,000 earlier, but with the market going down so much, we keep going down in this account, which is unfortunate, but it is what it is. We're here to make some money with this account. We're going to be adding in the beginning of the year $6,000 to this account, which will put it over 30. Plus, I'm hoping for a lot of capital appreciation. Inside activity started on the 14th. It's been a little while since we've done an update. I did sell JP Morgan, all 5 shares for $513.08. I did sell 3 shares of Verizon for $181.86. And the reason I did that, I was freeing up some money to buy either Goldman Sachs or MTB. Spoiler alert, I did end up buying both, but not both inside Fidelity. Also, we got a dividend from 3M of $14.70. M1 Finance did actually transfer over the dividend for Walgreens. That's the $2.36. I was surprised. I did not think I was going to get the dividends transferred in from M1. If you watch my previous videos on the last portfolio update, I really didn't think they would do that. They kept some of my stocks. They told me it was $100 for the ACATS transfer. They charged me $200. I showed them the email stating it was $100. They said that I should have read disclosures. So that kind of sucked. But $630 from Old Republic. And then O Realty, we got $467. And then I also sold my BTI, my 7 shares, because it was up. And then I did get another transfer of assets for $11.16. That's from 3M, the shares I had, inside our M1 Finance. So the other 3M dividends that I received was from my Fidelity account. These came in from my M1 Finance. And then I ended up buying, guys, in this account, the 5 shares of Goldman Sachs. So if you watch my bank video that I did, I went over what I think is the 3 best banks hands down. I also went over what I think the best 3 big bank stocks are. Talked about those. Goldman Sachs is one that was on my top list. So I ended up buying 5 shares of them. I did buy the 3 shares back of Verizon. I did want those 3 shares of Verizon. I just sold them to make sure I had $1,000 to buy the 5 shares. The 5 shares ended up costing me $973.75, but I didn't know that for sure, so I wanted to make sure I had enough money. Once I knew I had enough money, I bought the 3 shares back. I actually bought them back a little cheaper than what I sold them for. Balances were sitting at $159.46. We will probably be buying something. I'm not sure what. I'm looking at possibly REITs or more AT&T. That's the plan right now. Inside the HSA account, we're looking at $10,720.40. But just so you guys know, inside both my HSA and my cashback account, I have purely ETFs in both accounts right now. Therefore, there's usually not a lot of activity. So if you guys watch this, you want to skip past this, There is timestamps in the description, also the bottom of the video. You can look at the time bar of the video. You can see there's like a slash or a little line that's splitting up into the different chapters. You guys can always skip past this, but I'm trying to show you guys everything. So if we look over here in activity and we go down to the 14th, really had nothing. On 9/17 we had $2.89, and then this was actually nice. We did get for VYM, we got $21.16. Next week when we go over how much I made for October and dividends and everything, we'll see how this changed my HSA account and getting this $21.16. It is a nice dividend. But generally speaking, a lot of times when I'm looking at my HSA and cashback, since they're all ETFs, there's not much activity. Most of the activity is at the end of the month. So it's kind of nice to get a little bit of activity on this one with the 2116. Balances, we are sitting at $1,337.20. We're going to have a CD renewing in October. We'll probably be buying quite a bit of ETFs with that money. Not 100% sure what we're going to buy. Maybe more VYM, maybe more SPHD, maybe some bonds. Inside the cashback account, we're sitting at $132.58. This was all free money, guys. This is all cash back for my credit card. I don't use my credit card a lot, so it's $132 for free, which is awesome. Inside activities, we have 71 cents for VYM. So that's not bad. 71 cents is 71 cents, especially when you're looking at only $134. We will be later on getting a dividend from SPHD, but that won't show up till the end of the month. So on the next one, I might bring that up, talk about that. And balances, we're sitting at a big 98 cents right now. I'm hoping beginning of the month, we'll get some more money from cash back from the credit card, maybe 30, 50 bucks. We can use that and buy some more stocks and keep growing this. And again, this is great because this is free money. So to me, this is just awesome to get this little, even though it's not a lot, it's free. I think it's awesome. We're inside the Robinhood account now. And the first thing you guys might notice is in the right-hand screen, it says free stock. If you guys have not signed up for Robinhood, make sure you guys use the link in the description below. Sign up for Robinhood and you get a free stock, which would be awesome. If you're looking at the 1 day, it shows that we're up $33. But that's not really what happened for the week. The week we're down $1,000.81. That really sucks. But it is what it is. We're still getting dividends in. I made a big mistake in my Robinhood we're going to talk about shortly. You look at the month, down $3,000, guys. That looks terrible. And then for the 3 months, $766. So that doesn't look too bad. The year, we're down $3,865. So this month kind of killed me in a sense when it comes to capital appreciation. And then down $3,000 since we started. So I'm really trying to show you full transparency. If we have down days, you're going to see them. You guys see the good and the bad, full transparency, what's going on. $15 put for Haynes will probably be expiring worthless. BP, I will probably end up with 100 shares of BP unless some miracle happens. Now, the mistake that I made, if you notice, ExxonMobil is not here. I bought it back for $540. That's terrible. The reason I bought it back is it was at $540 to buy it back, and then I could sell it for $560 at $39.50 and push it out a month. So what I was going to do is collect $20 in premium, push it out a month, and if I was stuck getting the 100 shares of ExxonMobil, they'd be at $39.50 a share versus $40 a share. So it'll save me 50 bucks, plus I'd have picked up $20. I thought it was a great deal. So I bought the contract back, instantly executed. I went to sell a put for a month out at $39.50. It wouldn't get executed. You guys will see in the history, I kept trying to do it, would not get executed. It kind of really sucks. I do use some margin. If this is the first time you guys are watching this video, I do have the cash in margin. So if I get a bunch of margin, I could pay it all off tomorrow if I wanted to. Well, I guess I'd have to wait for the transfer to go through, but you get the instant deposit with Robinhood Gold anyways, so it would get paid off the next day if I wanted to. But the reason I wanted to push it out is the nice thing about margin in contracts with options is that however much collateral they're holding for you, it's held in margin and you're not charged any interest on the margin. So it's kind of awesome. So I'm making money off of Robinhood's money. I don't suggest this to most people. Again, if you have the actual cash, it's not an emergency fund. This is actual cash that I just have sitting in the bank that I could pay it off. Again, not my emergency fund. I could pay it off. That's fine. Most people shouldn't use margin. Probably like 90% of people, maybe more. So it's not something I suggest, but it does suck because now I don't have the shares and now I'm using $540 more margin for shares I don't even have. So the plan is come Monday or Tuesday, if the stock's down Exxon, which I'm hoping it is, I'm just going to buy the 100 shares now. That way, at least have something to show for the margin I have. If they would have got executed on the second, which would most likely happen, they would have took $4,000 out of my account and I'd have 100 shares of ExxonMobil. Right now, they took $540 out of my account and I have nothing. So buying the shares back, especially if it's under $34.60, basically I'm breaking even. It's kind of a wash. It's like buying them for $40 a share. If come Monday it's down to like $34 flat, then I made like $50 in a sense. So that's the plan right now. PBCT, we're going to see if that gets executed. It's not to the 16th, but that is down a lot. I don't care if that one gets executed. That's a good company. I do not mind that one at all. I really didn't want a bunch of oil stocks, but they're very cyclical industry. So I should be able to make quite a bit of money on oil right now. Yes, short to medium term, oil should make some great money. That's what I plan on doing with it. Locking in some capital appreciation, taking some profits off the table, collecting some dividends while everything goes through. As long as they keep paying the dividend, BP's dividend at $22 a share is over 5%. The margin is 5%. So I will make still money off of the margin when it comes to the dividend. Same thing for Exxon. Exxon's at 8% at $40 a share. They're charging 5%. I'm making 3% on top of that. So I'm still making money, which is awesome. Plus all the dividends that I'm getting from the stocks I already own that are not on margin. I only have about $3,000 in margin right now, guys. AT&T, that might get executed. I really hope that one does. That's on the 23rd. I don't know if they'll still be down come the 23rd. I love AT&T. It's my biggest holding. I would like another 100 shares at $28 a pop. That sounds fantastic. I hope that one gets filled. Ford, that was a call I did. Picked up $10, I believe it was. It's only worth $6 right now. Ford, I really want to get rid of those shares. My cost basis is about $8 a share. So if I sell them for $8.50, I make $50 plus the $10 premium. I'd love to get rid of Ford. If Ford keeps shooting up, I'm going to keep doing calls. I want to get rid of those 100 shares. Altra Group, I would not mind another 100 shares. I really don't want the full 100. I really just want 25 of them. So I'll probably wait when that one goes up some. I'll probably sell 75 shares, keep the 100. But I don't know. I might try doing the wheel strategy. I might do some covered calls with Altra Group. Pick up some more money, see if I can chase the price up with the covered calls and just keep pushing the covered calls higher and higher and make more and more premium and keep doing more and more contracts with them. That would be awesome. So we scroll down. Holdings are still the same. The only thing I changed is I now have 10 shares of MTB sitting at 91.30. So I bought those 10 shares on margin. I was at 1,600 in margin. I bought the 10 shares. I was at 26. Just so you guys know, I want to say it was like maybe a couple months ago, I was at like $3,000 in margin just from doing the premiums, the dividends, a couple swing trades. That margin I brought down $1,500. So I was like, you know what? I'll buy 10 shares of MTB. I bought them. I think it was like $963 or something like that off the top of my head was the cost basis. So I picked them up. I'm going to use my premiums and the dividends I'm making to keep paying down that margin. Once it goes down to maybe $1,500, I'll spend probably another $1,000 on stocks. So that's what I'm doing. I'm letting it go down. I buy $1,000, pay it down, buy $1,000. They charge you $5 a month for gold, and you get $1,000 in margin for free. So if you don't use any margin, you get charged $5. If you use $1,000 in margin, you get charged $5. So I use the $1,000. That way, I'm making money off of that $5 that Robinhood's charging me. That's why I end up buying some more stocks, get it back up, let it come back down. So overall, my stocks are just growing. I'm acquiring more shares. I'm getting more stocks, and I'm keeping my margin low. But when all these contracts get filled for oil, Margin's going to probably shoot up. Stay tuned for that. But come the beginning of the year, probably within the first quarter of the year, that's all going to get paid off. So, because I'm going to be putting about $9,000 or $10,000 in Robinhood, I believe, right now off the top of my head. That's the plan. Scrolling down, everything else looks pretty much the same. Insider history, starting on the 14th, I did buy back the AT&T contract for $9.18 for $3, and I did buy back PBCT expiring on $9.18 for $5. I bought both those back for $8. Then I sold the AT&T one for $61. So that's another great thing. If that contract gets filled for $28, they already paid me $61. So not only am I getting AT&T for $28, which I think is a steal, I also got paid $61 to do it, which is even better. So basically my cost basis is going to be $27.39. That's phenomenal for AT&T. These are some contracts I was trying to buy back my main put, and I ended up buying the AT&T contract back for $51 because I had a feeling it was going to go down the next day. So remember, guys, they paid me $61, bought it back for $51, pocketed $10, ended up buying my main contract back for $5. They'd paid me $100 for that contract, so I made $95 off that main contract. And then I sold my forward call for $10. Duke paid me $9.65, which is great. And then that Altria contract, $115. I think $40 a share is pretty cheap for Altria Group. So getting $40 a share and getting $115, that's awesome. I ended up selling my AT&T put again, but this time for $59. So doing a little bit of swing trades with the puts. Of course, I'm not going to be selling it now because one, it's quite a bit more to buy it back. It's not under $59 to buy it back, but I'm also really hoping those shares get executed. With that being said, though, it would suck that if everything just kept tanking and tanking and tanking, I'm not going to sell anything. I'm going to stick through it, but it still kind of sucks. But it's mostly like kind of hurts your ego, I guess, when you're seeing that your portfolio is doing bad. Either way, guys, dividends coming in. We're making money. There's the MTB buy for $963.30. RDSB dividend, $4.80. I tried to buy back the Haynes one. Didn't go through. Eventually, we'll buy it back for $5 and we'll probably do another one. Or I might buy 35 shares of Haynes, haven't decided. There's that buy for $540. That sounded like it'd be great. See, I extended out to 11.6 for $560. Was not going through. That's what really sucks, guys. I guess when you're trying to push a contract out, something to be aware of. This is something I didn't think about. You guys can learn from my mistakes. Is check the spread. See what the bid and ask are, guys, before you're doing this, okay? Because what happened is the spread was so big that nobody wanted to buy the contract at $560. But Robinhood said, oh, that's the middle number. That's the median of what people will pay, $560. Well, there was a lot of people wanting to sell it for higher than $560, but a lot of people wanted to buy it for quite a bit lower. So the spread was so low and it was fluctuating so much. This thing was kind of going all over the place, which sucked. I could not get it to execute for $560. That was a real bummer. I really wanted to push it out a month. I wanted to pick up that $20 in premium, and I wanted to buy the shares for 50 cents less a pop. It would have been a win, win, win. Unfortunately, it did not go through. So right now, it's a big loss. Right now, I'm set at that negative $540. We're going to see, hopefully Monday I can get those 100 shares, or maybe I can actually push this contract out. That would be the best, but I doubt that's going to happen with how big the spread is. You see all of these cancel. I was kept trying to get it through, and I could not get it to execute. Whether I was changing the price around, moving around, nothing would go through. It really sucked, guys. I was in a bad mood that day. $6.20 for BP. BP, I did have my M1 Finance. Hopefully the ACAT transfer from one goes through. The other ones did, so I'm expecting it will, but I'll be watching out for that. We got some dividends coming in, which are great. We got, PEG still coming in this month. Then coming in October so far, we got PPL, Coca-Cola, Altria, PM, and Oxy. We have about $130 in dividends right now coming in. Make sure you guys stay tuned to that video I got coming out. I show how much I made in premiums. I show how much I made from dividend for all my accounts, and I track it out, guys. You can see how it compared to next month. We are now in the Grand Portfolio Tracker. I kind of like the word grand. Added it to my portfolio tracker. Maybe I'm weird. If it's your first time watching, As you can see up here, we have ticker, company logo, company name, share price, number of shares, dividend yield, annual dividend, market value, annual income, portfolio allocation, sector allocation. I organize it by sector allocation. So as you can see here, they're all organized, they're all in order. I show everything with you guys. As you can see, all the shares I own. There's more stocks. We'll scroll down. Haynes is at 0. I do have a put option for Haynes. Haynes, I think, is a great company. I've made quite a bit of money off Haynes. I'm considering picking up 35 shares because basically what those 35 shares would cost me, I've already made off of Haynes. So I would be getting those shares in a sense for free. So if I buy 35 shares, Haynes went bankrupt, basically wouldn't lose any money because Haynes already has paid for itself. This is what I use. If you like this, this might hopefully give you some kind of ideas on different things you might want to do with your portfolio. If we just keep scrolling down, these are some other companies that I own. I said earlier in the beginning that I'm a dividend investor primarily. That is true. Unfortunately, not all companies pay dividend. There was quite a bit of cuts. As you can see, we have some 0%ers here. Disney cut too. Disney to me is more of a growth company, but they did pay a dividend. I'm okay with keeping them. I have a lot of faith in Disney for long term. I think I'll make a lot of money in capital appreciation. Yes, primarily dividend investor, but I am definitely okay with having a little bit of capital appreciation. If I see an opportunity, I'm going to take advantage of it. I picked up a couple new companies, mostly banks. Banks right now, I believe, are, just me personally, a very safe bet, and they're on a deep discount. Every time there's a recession, interest rates generally get cut to 0, or if there's some kind of financial hardship. They are at 0 right now. When they go to 0, banks make less money. Are the banks going to go out of business? I don't think so. I don't know if it's possible for the banks to go out of business because they're so intertwined in the economy. And it seems, in my opinion, that they're like backed by the government. So they're not going to go anywhere. Okay? Yes, and I don't mean the FDIC. I mean the government needs the banks. The banks aren't going to go anywhere. We got Wells Fargo. This stock, I believe, will over double. So this is mostly for capital appreciation. I'll sell half my shares, keep the other half, make all my money back and some, and be left with 20 shares for free because I got 40 now. But some of the new ones I picked up that I did not have in the last video is M&T Bank, picked up 10 shares, and then the Goldman Sachs. It's about $2,000 I added to financials. That's what I wanted to do. I wanted better financials, and I wanted more money in financials. I do think JP Morgan is a great bank, but I think these ones are in a better position for capital appreciation, and their dividend track record is amazing. Like I said earlier, check out my other bank stock videos, guys. You'd be surprised. At the bottom of the screen, a couple things I wanted to mention that I almost forgot is annual income. This is something I watch. I am projected to make $3,077.58, and that's with the equities that I have now. In equities, I have $98,274.58. In margin, I have $3,166.09. So withdrawable, right now I have $95,108. Inside my 457K, I have $32,326.33. That's all in an S&P 500 index. I'm separated from my employer. I can withdraw this money right now. I'm going to start withdrawing most likely $10,000 at the beginning of the year, somewhere probably in the first quarter. That's going to be put in the Robinhood account. Goal is to get some of this money out of there. This money is probably making dividends. It should be since it's an S&P 500 index, but it all kind of happens behind closed doors. They're not showing me how much I'm making in dividends. They're just showing how much I'm gaining in capital appreciation or how much I'm losing in capital appreciation. These are going to be moved into a more dividend-oriented portfolio. It's going to be in Robinhood, and we're going to try to get this money up substantially. I would love next year to get this to at least $4,000. And this annual income is all stocks, all dividends. It's not any money I'm receiving in interest from different savings, high yield savings accounts I have or any CDs I have outside of these brokerages. Also, it doesn't include any premiums You guys keep up on my monthly videos where I show how much I made in premiums. I think I have a very good Google Sheets that really graphs everything really nice. You guys can check that out. This is great for tracking. If you're a new investor, older investor, experienced investor, non-experienced, it's phenomenal to track your guys' dividends. So now we go down to the portfolio allocation down here. As you can see, a lot of my portfolio is in that 457K. I cannot wait to get some of that money out, put it into the rest of this pie here. Unfortunately, they change the colors every time I load into this Google Sheets, but unfortunately they made, well, Merck and Abbey, they both made white, so they kind of look like the same. But I don't know why you guys can see, we have 3.5% in Abbey, 1.7% in Merck. If we click on the image though, it does show quite a bit more, which is nice. So that's where you see the Abbey's at 3.5%, Merck's at 1.69%. These are the different percentages I have. As we can see, this big slice over here, that's AT&T at 6.56%. So this is a pretty big holding. This is my largest holding. I'm a firm believer in AT&T, and I love the dividend income. It's a huge plus. You generally don't get a stock that pays a high dividend yield, but also does something you believe in. I believe in telecoms, especially when it comes to cell phones, is like a utility. I don't see it going anywhere anytime soon. And then the media side of it, I think will do phenomenal over time. Will it be the best? Who knows? I'm betting it won't be the best, but I also believe that people have multiple media companies, so they might have Disney, HBO, Comcast's Peacock, and Netflix. They might have every one of them. So I do think over time the media side is going to do phenomenal. Overall, you got Disney, you got Duke, SPHD, and you can see all these different holdings. And you can see over here I got other ones. It doesn't show every single company on if you look on these main ones here. But at least if you scroll over, it's kind of nice. It does show the smaller ones that aren't popping up, which is just neat. Like you see Unilever is 0.62%. And then right next to it you have 0.036 is BP. If we get those 100 shares, BP is going to be quite a bit larger. These are the two that I look at the most. Annual income, cash equivalents, 28.1%. I'm making about $1,200, a little bit more a year in cash equivalents. That's outside of the brokerage accounts. I keep track of this from my own personal knowledge, but I share it with you guys too so you guys can see. I don't mind if this $1,200 grows in the physical amount, but as a percentage, I want it quite a bit smaller. I don't want 28.1% of my passive income coming from cash equivalents. And some of these other ones, consumer staples, I love that it's 13.4%. I like having a big spot in consumer staples. Just unfortunately, it mostly comes from tobacco. But I look at these and see how are these different sectors generating money for me. And you just scroll down and look at all the different ones. Telecoms, of course, does big because AT&T, utilities, all these different amounts. But what I use the most is probably sector allocation. I'm a firm believer in sector allocation. So I try to weigh things the way I want. Not that everything's weighed equally, but they're weighed the way I want. ETFs, probably going to grow. I don't know how big it's going to get. I really don't want it over 20% of my money in the ETFs, but we're going to see what's going to happen. Initially, I wanted 10%. Somewhere between 10 and 20 will most likely be fine. Consumer staples, that's at 14.7. I like that. I just wish it was less tobacco exposure, but I love having a big chunk in consumer staples. Energy's 8.5. Stay tuned, guys. I'm sure that'll be quite a bit higher. I would like to get that one down, but it's not a bad thing right now because short to medium term, they're going to turn around. I'm going to cash out on probably half my position, if not more. Collect some good gains. I'm going to definitely take some gains off the table when it comes to energy. I'm not going to be heavy in energy. I don't plan on staying heavy in energy. If it does happen, it's short term. Financials, 7.7%. That's looking great. I wouldn't mind that higher right now. Once financials recover, because it's a cyclical industry, it's going to go up. And right now, guys, it's voting season. So there's quite a bit of uncertainty in the market. So that's why I think stocks are down a lot. I talked to Fidelity. They're under the same impression. They're swamped with people panicking, calling all the time. And they're there for people. It's not that they don't like it, but I was talking to them. Yeah, they're really busy. Those guys are swamped. I wouldn't mind growing this position more. Once the economy recovers, I'm going to sell some of these, take some gains off the table. But I like financials. I don't mind having financials. I don't think they're ever going anywhere. You got our healthcare 11.7. I wouldn't mind that 10% going down some. Industrials wouldn't be bad, 5%. Materials 5%. REITs, I'd like to get 10%. Right now is a great time to buy REITs too. I'm just trying to find REITs that I feel comfortable in putting money into. But REITs is a great time to buy right now. I think you're going to make a lot of money on REITs. It sucks a lot of them cut their dividends, at least quite a few that I own cut their dividend. But over the long term, REITs is definitely where I think people should put their money. It's definitely going to be a great industry. Technology 4.5. I'd love to raise that, guys, but it's hard to find a good dividend company. That's also in technology. It's not crazy overvalued. Yes, there's absolutely great tech companies, hands down, but they're extremely overvalued in my opinion. I try to buy undervalued stocks, but great companies. I don't try to buy great companies for insane prices. I think a lot of people get confused and believe that Warren Buffett said at one time, buy great companies no matter what the price is. He said buy great companies at fair prices. When he said a fair value, I'm pretty sure he meant slightly undervalued. A lot of it for me that I feel comfortable is more the cyclical stocks. Stocks that are down quite a bit, then I'm sure is going to go back up. Telecoms, that's probably too big. And I might end up with another 100 shares of AT&T. I'd love to have another 100 shares of AT&T. This slice will grow higher. I probably need to quit buying telecoms. It's definitely getting too big. Utilities 5%. I like that.
That was a lot of information to cover. 2 weeks worth of portfolio updated information. We did not update the portfolio last week because I released the best bank stocks period video. You guys should check it out. And the Wednesday before that, I released the best big bank stocks. So if you guys are interested in financial stocks, check out those videos. Next week, guys, we're coming out with how much I made for September in total passive income. That's including dividends and also including how much I made in premium. I'm sure you guys will be surprised, especially if you checked out last month's video with how much I made. Kind of a shocker. Now remember, guys, it is voting season, like we said earlier. So make sure you guys subscribe. Helps out tremendously. Like button notification. Share the video with everybody know. And remember, guys, as always, think wealth.